In this very episode, we'll be discussing on market divergences and how to correctly trade them. Without wasting much time, let's get into business. Now, what is a divergence? A divergence, basically there are two types of divergence. We have the regular divergences and then the hidden divergences. Of course, there's a third kind of divergence called the exaggerated divergence, but I will leave that out for now. So regular divergence and then hidden divergence. All right. Now, under regular divergence, we have regular bullish divergence and regular bearish divergence. Then under hidden divergence, we have hidden bullish divergence as well as hidden bearish divergence. All right. Now, what is a regular divergence? Regular divergences are a pattern in the market that signals trend reversal. Okay, whenever you spot a regular divergence, it's for a reversal. It's a reversal pattern. Okay, so a regular bullish divergence signals a reversal from bearish to bullish trend, while a regular bearish divergence signals a reversal from bullish to bearish trend. All right, so I'm going to show you an example in this very video of what a regular. Now, how does regular divergence happen? Regular bullish divergence is a situation where a price makes a high, a low, a higher high. Indicator, on the other hand, makes a high, a low, a lower high. So while price is making a higher high, the indicator, on the other hand, is making a lower high. So I'm going to insert an indicator because it works with an indicator. Several people use different types of indicator, but I'm going to use the RSI. It's one of the major indicators for spotting divergences. The relative strength index period 6 is what I'm using. You can use the default period, which is 14, but I prefer to use period 6. All right, so we have this here. So let's locate a typical example of a regular divergence. Are we there yet? Okay. Let me start from the beginning. Let's look for it. A regular divergence. Market makes a lower low. Indicator, on the other hand, creates a higher low. That is a regular bullish divergence. Just a little bit of patience. Okay, look at it here. Now you can see we had a low here, then another low here. So overall, market to the downside, right? Now trace this to this level. You can see the indicator there. It creates a low here. Then here it creates what? It created a higher low. So while market is to the downside, indicator, on the other hand, is to the upside. This is a regular bullish divergence. And then you see what followed next. Market started shooting to the upside. Sorry, as you can see. Okay, as you can see. So after this, what happened here? What followed next? Market started, of course, it came back. In fact, it's even double, because between here and here there is a kind of lower low formation, for which the indicator too still had what? A higher low formation. And then at what point should you have gotten into this market? At the formation of this, at the end of this bullish engulfing candle. An entry opportunity provides itself for you to make your entry, your buy entry. And of course, if you are taking it, price continue to the upside. Now note something. price made a lower low, indicator on the other hand created a higher low. I hope this is clear. So this is what a regular bullish divergence. So let me show you a regular bearish divergence. A regular bearish divergence. Okay, here it's not so clear, but that is what happened here. You can see that price created a high here, then a higher high, so to the upside, right? To the upside. Then indicator on the other hand created a high here, then a lower high, so to the downside. So after that, what happened? You see, it went back, retested that level, and of course it moved to the downside. Okay, now the next thing I want to show you is hidden divergences. Hidden divergences, like I told you, it's for continuation pattern. So a bearish hidden divergence is a situation whereby market creates a lower high. Watch this, a lower high level. Then indicator on the other hand creates a higher low level. Rather a higher high level, not a higher low. Okay, so price, this is a high, a lower high, right? Indicator on the other side a high, then a higher high. So let's look for it in this very chart. If we don't see it in this very asset, we then get another asset that can clearly show it to us. And if it would take time, what would happen is that I would then treat it in details in the Telegram community. All right, so make sure that you're in that Telegram community so that you don't miss out on anything. I keep emphasizing that what the goal is consistent profitability. So until you are consistently profitable, the training is not over for you. All right, so access the Telegram community and get all the needed help that you need. All right, let me check for another asset, VIX 75, for a hidden divergences. They don't often occur, but when it does, you can count on it. Now look at what happened here. This is a prime example of a hidden bullish divergence. Now watch what happened. We had a low here. All right, let's the whole of this region as a low. So we had an indicator as a low, and then we had a higher low, so to the upside. But indicator on the other hand had a lower low, so to the downside. And then after that, what happened? You see price continued to the upside. Even till this very moment, price is still above the level. All right, so I told you that hidden divergences are for continuation. You see price was what? In a bullish trend. So the divergence we saw here actually just helped us confirm that what price is going to continue in its bullish trend. And that's exactly what happened here. As you can see, we had a higher low formation, indicator gave us a lower low formation, and after that price continued to the upside. All right, the opposite would apply for what? A hidden bearish divergence. In a situation price creates a lower high, indicator on the other hand creates a higher high, which I already showed you in an example. So this will be also treated in details in our community group. All right, let me see if I can find a hidden bearish divergence. Okay, so we have one here. We had a high here, a lower high here. So what? Price to the downside. Indicator on the other hand, our RSI, we had a high here. Instead of a lower high, we had a higher high. So it's pointing to the upside. Are you seeing it? After that, what then happened? Price continued to the downside. Are you seeing it? So this is a prime example of what? A bullish a hidden bearish divergence. The last I showed you was a hidden bullish divergence. All right, so divergences help you to actually make good entries in combination with market structure. All right, so for instance, in this very situation, price a high, a low, a lower high, a lower low, then a lower high level. Now, having seen that indicator had already given you a bearish hidden bearish divergence, it tells you that this price is continuing to the downside. All you're looking for is what? For a rejection at this level. And of course, you can see our pin back candle forming there, giving you an entry opportunity. Of course, you can even see it correspond with what? A retest of a previous support now turned resistance. At the rejection of that, in combination with the hidden divergence we just saw, and then the pin back candle, there's just so many confluence of so many confluence factors, rather, so many factors, pointing to the fact that this market is going to the downside, that it's going to continue selling. And of course, it continued selling till, if I shift my chart, we can now have a full picture of where it's sold to. All right, so these factors here: a retest of a previous support, it's one; a pin back candle, second factor, of course, hidden bearish divergence, third factor, and of course our lower high level, fourth factor. So having multiple factors only gives your trade a high probability setup, okay, for being profitable after taking it. All right, so in this would bring me to the end of this very episode. Of course, I would see you in the Telegram community. Cheers and God bless you.